Love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Good morning. Just getting a trade posted for the Pulver alerts. Took a trade on Lululemon this morning. So I had a pending order with the 195 by 190. With the big drop overnight in earnings, I lowered that down. So I canceled that trade after hours yesterday. I put in the trade instead of 160 by 155. I'm getting this posted right now with a screenshot. So I've got my option strat built out, put this in, and it's coming in about 10 seconds. So for Pulver alerts, this is a ratio spread for $210 with a potential profit trap, also willing to own the shares and repair it if needed, but we'd have to go down about 71% from the all-time highs and also continue to drop off of a sharp earnings move. So trade is in, trade is posted, and it's under the stocks options trades in Pulver alerts. And that is it. I also wanted to update my campaign trade on the IWM. So let me go IWM. Covered calls, rolling, credit, break even. Okay, I'm going to update this. So I just did a roll today. Let me find out those exact legs. Let's go here. All right, so this is a campaign trade. And I just did a roll, so I've got to update the roll. Dadgummit. There we go. So the 5:30 expiration, rolled the 6:9 expiration, and now rolled to 6:30 expiration for another. You got $1.10 out of that this morning. IWM, $1.09, $1.09, $1.09, $1.09. So yeah, I'll put $1.09. I'll take the lower credit. So $1.09, which gives me a new break even of 194.58 minus $1.09, puts me at 193.49. Okay, so if that gets called away, minus 200, 651. So $7,000 by the end of the month on Russell. If it just, stays where it is, if it pulls back a little bit, that's fine. If it goes up, that's fine. I'm just going to keep adding some covered calls, maybe out hopefully every 1 to 2 weeks, and trying to pull in about $100 per roll. That's my goal. So like today I looked at it. If I went out like a week, it was going to be like $30. I went out 2 weeks, it was about $60. Went out 3-4 weeks, I went about 3 weeks, got $100. Okay. So that's getting updated. Let me find that one here. So my campaign covered call, let me jump to that. I'm going to update this in the Pulver section. I'm still keeping the Russell futures hedge. So my RTY hedge is still active. That's a $510 risk for a $14,000 reward. That's if I need it. If we have a collapse in the markets by the end of the year, I'm hedged on SPX, I'm hedged on SPY, I'm hedged on Qs, I'm hedged in the futures market just in case I need it. Russell, I did the same thing for this campaign trade. So I'm going to reply to this, and then Russell trade management update, campaign trade. The 6.9 or the 6.6 expiration, 200 sell call has been rolled out to 6:30 expiration, which is a Monday. 200 call for $1.10 credit. New break even price is 193.49. Okay. Okay, so that's updated. Drama yesterday with President Trump, Elon Musk. Market doesn't seem to care. Here we are on the higher time frame. This is just zooming out on a shorter time frame. Looking back the last several weeks of trading, we had some sideways chop here from the U.S.-China trade agreement gap. It went up, it went down, it went up again. We did break these highs this week. We had some drama right around this trend line. I think this is a trend line we still need to watch, especially, I would say, if we are, if we're going to keep melting up higher. Okay, if we're going to keep melting up higher, let's say we tag these highs. I mean, we can look at this chart and I will do this. I'm just going to take a stupid little Fibonacci from this low to whatever high we form. And if we have like a 30, 50, 70+% pullback, those are levels I want to be adding into. If this market is just going to keep going higher, 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 then this is the exact same story as freaking COVID, which would be we're down, we're up, and we don't pull back until there's a break. I mean, that's what COVID was. We had a dip from February to March. We bottomed out. We ripped up all the way through 2020 for the rest of the year. Even into 2021, there was very little hiccups. It was just pure melt up. But in 2022, we had a 30+% correction. So I'm hoping that's not the case. But who freaking knows, man? Honestly, like it's so exhausting. Like Trump, Musk, U.S., China. It's like, okay, does the market care? Right now, it doesn't care. You look at price. Is anything telling you to be a bear right now? Not really. If the market is going to, break this low, if it's going to break around 5,800, then sure, the market is pulling back into some, notable levels. But until then, it just doesn't seem to mind anything right now. So if we hang out for today, it's like I'm watching this on my intraday chart. So I've got some trades in on SPX that I'll keep a close eye on. I could grab about $110 today if I let it go all the way to expiration. I'm probably going to try to grab like 60 to 70 bucks to be safe. But it's coming right back to center, which is good. So my trades for this morning looking a little bit better. So I'm up about $40 right now, and hopefully I can increase that to like 50, 60 bucks for a little day trade, and I can walk away. Give me 1 second. What is happening? Cancel trade, cancel trade, cancel trade. I don't know why. Let me see. Give me 1 sec. I do have this. Okay, so this account, these are getting canceled. All right, I gotta text somebody. Give me 1 second. Okay, I think somebody's playing with the account. Let me confirm that. Okay. So client had a bit of a family emergency, so we're closing down positions, but I think his advisor's jumping in here. So I want to make sure. So I'm confirming that. Anyway, let's go back to this. Watching these levels, we're right back to center. Little pop up on non-farm payroll, which was, solid numbers today. Forecast was like 110, came in 126 was forecast, came in 139. Revision was lower yet again. In fact, this is what I thought was the most interesting thing about this non-farm stuff is look at how many revisions we've had lower, 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 lower. Obviously, way down with that whiff. Lower, 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 lower. Most of the revisions for the last year and a half have been lower revisions. So even today at 139, what's next month going to show? Probably revised down lower. It's kind of nuts, but market didn't seem to care today. Futures up. There's your big jump in futures. So I boxed in the futures kind of range here we've been in the last couple of days. This goes back to the highs around the 28th and kind of the same thing right in here. We're not really busting higher. If we zoom in, futures market versus SPY is just a little bit different. I took the same look back. If I go back to the hour chart here, so I connected the lows from April 7th, and we've broken this just based on time, right? So time has broken the trend line, but price has yet to really break lows. And that's what I said. Unless price shows it, tells us that we're pulling back, it's just not yet. So could we come up here to these highs and hit the backside of the trend line, and that becomes a topping pattern? That might be the next logical thing. If we're gonna have a correction, that's probably what I'd be looking for. All-time highs back here in February. We get back to all-time highs here in the futures market. So question is, with this low in place, this low in place, this low in place, do we end up just grinding higher to hit the backside of the trend line? Do we then make a run to take out or sweep a low and then have a bit of a correction? So that's how I could see this market at least offering a pullback. But until price breaks down, I don't see that happening. Okay. So allow price to be your guide. We're still making higher lows, higher lows, higher lows. If this structure breaks, okay, fine. If we come to tap the all-time highs and tag them, and then we sweep these recent lows, then possibly a pullback into some of these inefficiencies, or just look at some fibs. Drag a fib from this low all the way up to a high. If we start to top out here, it's not that difficult to think that we go from a low to a high swing and then pull back to just some easy fib levels. Pull back to a 38% fib zone, pull back to like a 50 to 60% fib zone, and that's where the buyers would be kind of able to participate in a dip. If that dip doesn't come and it's just up and up and up and up and up, then okay, it's melt up city and this market is annoyingly bullish. It'd be like the low grind. I don't know if it's going to be a fast bull market. It's going to be a aggressive. I don't think it will be. All right. What's Johnny Boy saying here? But still lower than the previous. Yeah, that doesn't matter. I mean, honestly, look at all this. These numbers are all anything. Anytime we're seeing like jobs over 100K, it's pretty much seen as it's okay. There's still jobs. Jolt's job openings were still decent this week. ADP was a big miss on Wednesday, but non-farm was fine. Um, what you don't want to see is you don't want to see like a huge whiff for this thing's under 100K, and you don't want to see a big miss off of expectations, and you don't want to see unemployment going higher. You don't want to see initial jobless claims trending higher. So that's what I would say would be the next thing is if you look at initial jobless claims. So you go initial jobless claims or continued jobless claims. Take a look and see how those are trending. I mean, does anything stand out in this chart like it's some staggering unemployment data? Not really. I mean, we're going a little bit higher from December of last year, 205, up around 210, up around 216. But I mean, this resistance, I'd say June of 2023, until we really start breaking higher than that. And then you go to continued jobless claims, zoom in on this, kind of the same thing here. Is there anything that stands out at this that looks like it's worrisome? Not yet. So, I mean, we'd have to start trending higher. If you go to unemployment rate, we're trading at, this shows 3.9. Now, print today was 4.2. But go back and where things got scary, COVID, '08 crisis. I mean, even back here in 2000, 2001. Okay, I mean, we're talking crisis level things. Now, we are off the low since 2023. And this is unemployment rate, according to the Bureau of Labor Statistics. But, our non-farm today printed 4.2. So are we trending slightly higher? Yeah, we're trending higher, but look at the rate of change, right? Rate of change here, rate of change. I mean, these are obviously crisis type situations, late 90s. The rate is so excessive. I mean, even if it is going slightly higher, I I think it's okay. I mean, so I would say you just got to watch. If this is if we're going to sound any alarm bells, it's probably getting a big spike up here into like maybe the high 200s for initial jobless claims, and then continuing jobless claims. Same thing. I mean, if we get like a big spike, maybe over 2 million, and per the unemployment rate, still holding steady. I mean, and again, you almost wonder like, is this real? Is this real data at 4.2%? Are there some fudge numbers? Like, how have we had 1, 2, 3, 4 out of 6 months print 4.2%? Right? So you never know. But this is what the news were being delivered every first Friday of the month for non-farm payroll, typically, unless there's some holiday. It's very steady at 4.2%. All right, let's go to some other charts. Meanwhile, my boy James is just chiming. Fine. We take one look at something really quickly. All right. Gold we'll take a look at. We'll take a look at dollar, gold, oil, silver. All right, let's do dollar index. Let's take a look at currencies today. So dollar's up on the day, currency strength. Japanese yen weak, Swiss weak. I'm totally fine seeing that. At least shows there's some risk appetite in the market. Dollar's up, CAD's up. So it's interesting. We have this like kind of paired trading right now in currency land. We've got the dollar and the CAD moving very close together like all the time. We have the yen and the Swiss. Obviously, it's a little bit more disconnected today, but they tend to be on the same side of the trade. So if we have, Japanese yen weaker, we typically are seeing the Swiss do the same thing. If we have dollar strong, CAD strong, and Aussie, New Zealand tend to stay the same as well. So it's interesting you have these like lumped currency pairs. Just consider that when you're taking forex trades, is if you're trading Aussie, trading New Zealand. Um, Actually, this might be a nice way to kind of throw a trick up my sleeve when it comes to the trading battle that Nick's going to be hosting in a couple weeks. Because I can take basically Aussie one direction, New Zealand the other direction, do a pairs trade, and have them kind of work out with like I could win one, lose one, and try to let my winner run a little bit larger. Same thing on Swiss and yen. Same thing on, I don't know about dollar CAD. I probably say that's not the one, but Aussie New Zealand, yes. I think those are usually pretty tied together. And Japanese yen, Swiss, Japanese yen just getting a little bit more volatility. Are these questions for me, RP? What advice would you give someone who keeps losing trades or sticking to the strategy? I mean, find backtesting software and test your strategy. I mean, you don't want to fall into the same the definition of insanity where you're doing the same thing over and over again. You're following a strategy, but maybe you have a bad strategy. I mean, um, I'd be curious to see what the strategy is. Are you day trading, scalping? Is it very short term? You getting stopped out by noise? Your stops are too tight. You're risking too much. But there's little tweaks. I mean, trade smaller, risk less, trade wider areas, trade higher time frames. That tends to keep you out of trouble. Or if your strategy is really struggling, then obviously it's not a bad thing to pull in some other strategies. But I'd say most of the time it's not, traders lack direction. They just have poor risk management and maybe get themselves into too much noise. Markets can be noisy. Futures market can be noisy. Forex can be noisy. One of the things I've experienced a lot of times working with traders, one-on-ones and workshops and conferences and things, is hearing traders about like my stop always gets tested. My stop always gets tested. Well, then trade smaller and use wider stop losses, right? Or understand that the market is going to test that low or high that you're putting your stop loss at. It happens all the time, you know. So there is a lot of manipulation in those 20. I mean, futures market trades 23 hours a day. Forex market trades 24 hours a day. There's a lot of manipulation in those markets. So trading smaller certainly helps. Trading bigger time frames helps. It keeps you out of the noise. Giving yourself a stop that's based on a close above or close below, not just a test above or test below. And also considering like an ATR. If price is like half to one full trading range above that high or that low, that's probably a better stop loss than just putting it at the wick high or the wick low. So anyway, that's my 30-second spiel on if you're struggling with a strategy, there's definite ways to refine that strategy. There's ways to refine it, but still. All right. Dollar index off the lows. I think dollar index, if we are going to go stable on the dollar and stay sideways, this might also help the bond market stabilize, which I think that it has. If you take a look at, dollar versus TLT, have we stabilized off these lows? Yeah. In fact, I mean, this kind of ran a lot like the dollar pullback, came back down to revisit lows. We had a big snafu there with the basis trade breaking on April 7th, April 8th, April 9th. But the bond market has stabilized a little bit. It's still pressure, like it's still under a lot of pressure. My concern is that the bond market is not as good as everyone thinks and says, and I think that I mean, it look, we're always going to meet auctions. I mean, everyone's worried about this failed auction. Look, the U.S. is always going to sell, and people are always going to buy our debt. What we're going to do is we're just going to make the debt more attractive. Oh, you don't want to buy it at 4.5%? Well, let's make it 5%. You don't want to buy it at 5%? Let's make it 6%. Like it's going to suck, but eventually, like those bond auctions will still continue to be filled, and there's still the liquidity. But what I don't want to do is I don't want to have a bunch of exposure in TLT with a whopping 3.87% dividend and watch this thing still draw down 10%, right? If I'm down 10% in a yield that's 3.87, it's like, okay, so I just lost, 6% in something that's supposed to be safe haven. That doesn't make me feel better. I mean, so anyway, I'm trying to get rid of a lot of that exposure. So I'm actively selling calls on my diagonal spread with TLT. I've got an 89 right now, and I'll continue to work it down. I'm my break even on this thing is like, I don't know, Let me check the price here. Break even on TLT with my diagonal spread. It should be in the maybe the low 80s. Break even is 85. So my break even is 85, which means if I want to close it out right now, I'd still make 76 cents, but I'm trying to make a couple bucks on it at least. Okay. So bonds versus dollar. Let's go oil, gold, silver. Oil making its way back up to some resistance. I think there's some resistance here on 65. I don't think it's going to be a good thing if oil does. If oil pokes above 65, I would say that's a rejection point if we're going to keep the pressure on oil. If we're going to kind of contain this. Now, the other element is, do we break back above? Is this the low and the floor in oil? Do we put this trade in where it heads up above the 200 moving average, stays above the 65 handle, and then has a spike higher? Well, if you want to welcome inflation again, then you would say oil's going higher, inflation's coming back. Because one thing that's helped inflation go lower is lower energy prices, lower oil prices. So anyway, we'll see. It could just be still a range trade as well. If it stays sideways from 65 to 55, that's kind of my outlook on oil. All right. Let's go gold. Gold for the last couple of days, slightly lower. This is kind of playing games with. I initially I thought we'd just have a bit of an orderly correction here. Obviously price does its thing. Price can be a little bit imperfect, and I think this is still a good resistance area. Let me box this in. This is a pretty good looking resistance area on gold right now, and this would be my support. So support to me is still down here, and I'm not in a hurry to buy gold. I've been saying this now for months. Even with this run up, all I'm doing is enjoying my shares of GLD and looking to buy back in. I was going to put in a ratio spread on GLD, but silver's taking off. I'm putting more money into Bitcoin. I think between gold and silver both, it's like if I put in a ratio spread on GLD, let me see if I think I might have done this this week because I didn't get the fill because I didn't want to just take the trade. So let me go here, working orders. Okay, so I do have the trade in. Okay, so I'm doing a December 31st 245 naked put for $8. Now that's not anywhere close to being filled. But the reason I took that trade is if we have a shift lower in price, I was making it approximately what the like the out of the money move would be. So case in point is this: if we dropped down to this level, that number of strikes away, and I could still sell GLD out of the money. I'm trying to get like that kind of at the money credit. So I don't know if that makes sense to anybody, but basically, here's an option chain. Okay, right now, if I looked at, we're trading at GLD, it's 307. Okay, if I sold a put at the money and I went out roughly to the end of the year, so if we go January 16th, so an at the money put is worth about $12 to $13. Okay, so what I did is I went out of the money to a 245 right here. Okay. Now I want to own GLD at 265. So I'm not going to get $13 for that trade, right? Because $13 would be at the money. So I'm trying to go a little bit out of the money and take in a much higher premium for it. So if we are trading, and this is kind of what I'm getting at here, if price were to fall to this, I'm gonna just go GLD. If price were to fall to my 144 200 moving average, that puts me at 275 or so, puts me down to like maybe 265. I still want to trade this slightly out of the money at this past resistance and support area. So even if we hit the 200 moving average, I still want to trade this out of the money with an assigned put, right? Like I still have to have price drop all the way down below 245 to take on shares, but the credit that I'm seeking is going to be $8 versus I could take the trade today and get $1 for it. Well, that's stupid because if this is going to fall, okay, if this falls, if I take $1 today and this thing falls 20%, I'm taking on so much extra risk. I mean, literally, I'm taking on like $3,000 to $4,000 of risk right here just by watching a put go against me. So I'm going to stay out of the way. I'm going to put in a much higher credit level and allow price to fall to me. Okay. So anyway, hope that makes sense. So that's what I'm waiting for on GLD is let's see if we can come back and hit the 144 200 moving average. Silver, I like a little bit better. We are making a nice little run here. This is a hot run from around 33 to 35, almost $36. We poked those highs at 36. So let's see what gold versus silver has done. Oh, baby. This is what I wanted to see, right? This is the gold silver comparison. We did break this floor. So this big run up on gold has now rebalanced with gold and silver. So, again, where's it going from here? I don't know. I mean, maybe all of this resistance, maybe this becomes a floor for gold to get bid back up. Maybe. Okay. Or this was just a run up. This is still a range bottom, and maybe silver outperforms. I mean, I don't care either way. Like, I still like gold in the portfolio. I still like silver in the portfolio. The nice thing is if silver really gets the kind of outperformance play here when you compare the two, um, I mean, we're talking silver at some highs that have not been hit for a while. This is a big catch-up trade, right? So silver is moving along nicely. I mean, just from a technical swing, this low to high to this low to high, I mean, that's a measure move. Cool. So are we going to stop there? Well, if we do, we can still pull back to this structure. I still think there's a lot of support around $30 on silver. But if we're running into open space, I mean, we get up to 41. That's the fulfillment, right? If we have a low high, you pulled back to around 61%. The golden ratio is right up here, baby, 4107. So if this runs from 36, 37, 8, 9, 40, 41, that's a good profit target. If we're gonna go there, then any type of pause or pullback, I think we go to all-time highs, which is around 40 or 49 bucks. Silver does look like a good technical trade. So it doesn't mean that gold has to stop performing well. It just means that silver has to just play catch up, and hopefully it is. So this is why I've kept silver in the portfolio for the last couple of years, and this is why for the last 6 months when I've said gold at all-time highs, I don't love it. I don't love it. I don't love it. It's because I think silver, if it plays catch up, has something I can measure. I can measure silver to $48. I can measure silver to $41, and I could accumulate in here around the $30 handle, which is what I've been doing. Okay. Bitcoin has pulled back to about 100. This is that first kind of inefficiency I talked about. So is it done? I mean, that's not really a pullback buy for me, but it's recognized. I mean, it's acknowledgeable, right? I would say like, okay, we tapped that area, but pull back to like 98. I'd like to see if we can pull back to 98. Okay, so pull back to 98, kind of area one. Pull back to like 91 to 87, area two. Those are accumulation levels for me on Bitcoin. IBIT is at 59. Same thing here. I mean, if IBIT pulls back into this area, pulls back into this area, I'm still just going to dollar cost average into them. Okay. All right. What else? MicroStrategy 378. Coin. If you're in the Pulver alerts, I'm doing a campaign trend and MicroStrategy as well. The puts are up a little bit. So here's an example. Let's go MSTR. So I bought 100 shares. I sold a call at 385. That's already up about 500 bucks. I bought a put at 330. That's already up a little bit. Price is kind of sideways. It's okay. This trade ends up making me. Let me find the MSTR here. So this trade is making me around 2265 of income. So if it's above 385, I'm making about $2,200. Okay. And I will also use like the long put for protection, the sell call for income. It's appreciated. So I did roughly like an at the money call, and then I bought an out of the money put. So the premiums on MicroStrategy are so high that I pulled in like $3,000 on just that covered call. So I'll let price do its thing. But where we are, I mean, hopefully we just kind of stay sideways here. I wouldn't be terribly surprised with this proxy that MicroStrategy trades essentially as a proxy to Bitcoin, about 2 times leverage. It's not that. It's certainly not that. But there's some financial engineering going on with MicroStrategy, what they're doing in the Bitcoin bond world, what they're doing to kind of like raise funds to buy more Bitcoin, and it's kind of creative. There's risk. If Bitcoin were to go down, there's risk. But if it's not, and it's probably one of the more ingenious things that MicroStrategy has decided to do for the last five plus years. Gabriel asked an interesting question. If you had to restart your trading journey all over again, which markets would you trade and learn? That's a crazy question. Honestly, if I started all over again, I would just be trading what I trade now. And that's not to say that I didn't learn a ton, managing money in Forex and running a currency fund. I mean, I did. I learned a lot of technicals, a lot of price action skills in the Forex market. Um, but I think if I were to shift forward, I mean, those technical analysis skills were, invaluable to me. But if you want to give yourself a chance for like a baked in bias, trade the stock market, trade options. I mean, if you think about it, like you could just buy the SPY and know that there's probably about a 55% chance this market's trying to go higher. And even if you have a correction, you just buy the dip and the market's trying to go higher. And by dips, I mean any 10, any 20, any 30% correction, you're going to survive pretty much everything, right? I mean, yes, we had a 50+% correction in 2008 when the markets were basically on the brink of financial collapse. But every other correction has been between 10 to 30%, and you come out just making a fortune on the other side of it. So when you have that directional bias baked in, it makes it a lot easier than trying to trade a 30-year range that you never know how high or low it can go. Maybe it breaks all-time highs, maybe it doesn't. Intraday chop, 24-hour market. I mean, at least in the stock market, you can get some sleep. You can trade options, you can define your risk, you can speculate, you can build straight trades out where the market can go up to the moon or down to zero, and you're only risking what you say you're going to risk, right? Stop loss hunts happen in Forex, stop loss hunts and liquidity slips and futures. I mean, I'm way happier trading options in the indexes, way happier trading options in all stocks. So I trade futures, but I trade futures options. Um, the learning curve might be a little bit steeper to do that, but it is well worth it if that's where I started. If I started there, when I really started getting into trading in 2006, 2007, I mean, I'm not, again, you can't look back and be like, oh, I should have, could have, would have. But if somebody asked me the questions, what would you do? What would you learn? I would focus on options, and I would focus on, a market like the S&P 500, the Nasdaq, that is just built to go higher. Um, Not try to be an individual stock picker, but just learn how to generate income on indexes. And it's not that hard. It's not that hard. So I think that is probably the safest way I could have any trader start and generate some income, learn how to make some money, position a portfolio for an upward gain, and give themselves, the next 3 5 years, see yourself making some money, the next 3 5 years having returns that are adequate and encouraging, versus the grind of, you know I mean, Forex is a grind. I had great years in Forex where I had triple digit gains, and I had 30% drawdowns that drove me crazy for 6 to 9 months at a time. Like the amount of emotions it takes to manage that stuff. It's like, and again, those are like really important lessons to have, but it's not fun to go through them. And I'd rather have people learn from those type of mistakes and experiences that I had versus trying to repeat them. Nobody should have to experience a 30, 40, 50% drawdown on their account. Nobody should have to blow up their account to say that, I'm a trader. I've blown up my account. It's like, I've never blown up an account. I've had close calls. I mean, my worst drawdown is like 30+% in managed accounts. That's a terrible trade, right? That's a terrible portfolio at the time. I managed through it. I ended up coming out on top with some gains, but that was irresponsible of me. But that was fairly early. That was like 2009, 2010, which things were a little wild at the time. But fast forward to now, I mean, I trade smaller. My risk adjusted returns is as good as they've ever been. I feel a lot more comfortable when to step on the gas to be more aggressive, when to back off and be more conservative, and just trade mechanics, trade mechanics. I feel like I have a good like work life balance of being in the markets, and I honestly like I'm more frustrated at the noise around the markets, like the news and everyday Trump and everyday this. That's annoying more so than the actual market. Like I love the market. I love making money in the markets, but the amount of noise and sensitivity this market sometimes has, and other times it ignores everything. So it's like you also have to have that same type of filter where it's like you put blinders on, you focus on price action, and the rest is noise. Like I don't read the news, I don't watch the news, I just read the data. Like what's the data? What are the markets doing? What's happening in earnings? What's happening in the broader market? Like that makes sense to me, and that's a lot easier. So anyway, that's all I'm saying. I know that I've had like a very well-rounded kind of education in this 20 plus years of trading. I wouldn't really trade that for anything because it's made me the trader that I am. Um, but if I could teach somebody from scratch, I would certainly go streamline into this is the easiest way that I think that every trader has a good chance to make some income and money. So why not do that? I mean, nobody should have to wear the badge of courage or like the rite of passage of like, well, I did this as a trader and I got scarred like everyone else, so I'm a trader now. It's like that's a terrible experience because most people don't bounce back from that. Most people blow up an account and they just stop trading. You know, so look, trading is not gambling. I literally hate casinos. Trading is not gambling. American casinos have a 56% house edge. U.S. stock markets have a 55% baked in bullish bias. That's your edge. Just think about that. So all this doom and gloom that gets written out there, all the fear and the concern and the uncertainty that the market tries to, absorb, all the sentiment that gets horrible swings. The reality is this market is so resilient at everything that you just have to think of it as like it's noise. We can survive it. How bad does it get? Don't do anything stupid. You know, and you've seen it. You've literally seen it this year. This is a poster child for like how sentiment can get too extreme and what's the market do? Pivots hard, right? And then the narrative and the commentary start to fall in line, and here we are, 2 to 3% away from all-time highs. Okay, so it's just a bunch of noise, I guess, right? All right. Where can we gather data other than charts? I mean, newsletters, financial newsletters do the trick. I like Opening Bell Daily is pretty good. Robinhood Snacks is pretty decent. There's some podcasts that do a pretty good job, giving some macro stuff. But trading. Look, honestly, you could if you talk to Tom Sosnoff at Tasty Trade, he could tell you that he would never look at a chart and make his money. He doesn't have to ever look at a chart because what does he look at? He looks at the ticker, the option chain, and he trades the mechanics. Like that's how simple trading can be. Define your risk, trade the mechanics, let the probabilities work out, trade lots, and manage your risk. You don't ever have to look at a chart. If you trade options, you don't ever have to look at a chart. Now that's like super, super simple. And that's not me, but like you could do that. And there are traders that's all they focus on are the mechanics of the trade. Right. So all right. That's enough of a segment on that, but hopefully that makes some sense. All right. Let's do a couple more things here. So let's check some non-US. We did oil, we did gold, we did silver, we did Bitcoin, Ethereum. Yeah, I mean, if you're looking at a swing on Ethereum, this is not a bad dollar cost average position. If you're buying small, right, looking at the fib levels, stop loss below the lows, retest the highs, like the risk reward looks very good. I just don't like Ethereum that much. I like Bitcoin better. Okay. Stock options first, indexes second, futures third. I would just say learn options in general. Good way to start. Look, if you have Pulver alerts, you've got a 4-hour class you can have from me. It's a $500 class I sell. It's included with Pulver alerts. Watch it. It's 13 of my favorite option strategies. You wet your whistle, learn some basic positions, learn some spreads, and learn how to trade the mechanics of options. You can put them on everything, right? The nice thing is options is a tool to trade on all your favorite assets. If you want to trade index options, futures options, currency options, crypto options, you can trade options. It's a tool. It's a derivative, and you wrap it up over the asset you want to trade. Okay. All right. Japanese yen, weaker. So here's your dollar yen. Same thing. Dollar yen's probably going up a little bit. And I don't know. I mean, I still think this is an important level to watch. We might have some wild and crazy stuff happening if this floor breaks. If this floor breaks, there's a big, big, big trade on dollar yen. If this floor doesn't break, then this is just a range. And I hate to say it, but I mean, look at this daily time frame. I'd like to check with a couple of my friends that are big time yen lovers and curious what they're doing in their portfolio, because I feel like they might be looking at this area as major resistance. If it gets above it, they'll stop out. But probably just trying to put the heat on this trade where if this thing goes lower, ultimately to break the floor, that there's a monster position trade coming. I mean, it's not ready yet. Certainly not ready in Forex, but I'm also wondering if at some point the Japanese yen, as far as the CB rates or the official cash rates, Japan is at 0.5%, right? Will the U.S. ever get back to negative? Not negative, but will they ever get back to like sub 1%? I mean, I don't know. I don't know. But when would be the best time to short the dollar yen? When it's not negative swap. When it's positive carry and you can short the dollar yen, that'd be the trade I'd sign up for. But to sit here and short this thing and pay the broker every single day, it's like, that's a terrible trade. I don't care how bearish this thing gets. I still hate that trade. So anyway, I'm probably not going to take that trade. But I will trade Japanese yen futures and I will trade FXY. And that's what I'm probably going to benefit from. I mean, I'll make a good chunk of profit here if FXY, which is the inverse of the Japanese yen, if this goes up to finish that head and shoulders pattern, this gets me about a 25 to 30% gain on the position that I bought back here. Could I leverage this and go crazy on call options? Yeah, sure. But if I don't time this well enough, it's a loss. So I just bought shares back here and I'm holding them. That cost me $0. Like I bought the shares, it's zero commission. I don't pay anything to Tasty Trade to buy FXY. So that's why I bought it. So now this whole idea of like, Chris, what are you doing with the yen? Nothing. If the yen wants to get stronger, I'm going to make a lot of money on it. And I haven't paid a dime to take that trade. So it's just all gain for me. Obviously, there's risk. If the yen gets crazy weaker, then yeah, I'm taking on risk. But I think that swing to 162 on the dollar yen, I think that's ultimately like a top that's going to be hard to take out. Okay. Let's see. What's Germany doing? All-time highs? Kind of. Last couple days, poked some all-time highs. UK poked some all-time highs, close to it, very close to it. I like Germany. I like UK. I like dips. I mean, I think if we pull back, why? And this isn't just look. This isn't like the anti-US trade. This is just cheap valuations, right? Price to earnings on the S&P is 22. Price to earnings in the entire Eurozone is like 12. If you want to park your money where it has potentially more upside potential, like more potential upside, Europe is a good place. I mean, it's a developed economy. You've had decade plus of austerity, but now that is loosening and the Eurozone is spending more money, that's probably a good thing. Fiscal policy can help raise assets. So I think dips on Germany, dips on the UK, dips on the Euro stocks, like I think that's a good position. So here's Euro stocks. I mean, if we have dips on this, I'll probably buy some more shares, right? But it's just cheaper. Like valuations are cheaper. That's where money is flowing. Where's their money treated best? Maybe in a cheaper index. Argentina, China, I mean, better. We'll still have to figure out what happens with the U.S.-China trade talks. I mean, we both need each other. I know we don't We pretend like we don't. We pretend like we're gonna, ice out China. They're gonna ice out us. They're trying to do all these terrible, nasty deeds to us. We need them as a manufacturer. We need them for globalization. If we don't have them, our stuff gets more expensive. It's that simple. But our political system for 2 and 4 year cycles is a lot different than theirs. They've been probably plotting this for the last 10 years. I think since Trump came into office in 2016 to now when he's back, I would say that they're like, okay, Operation, Screw America will be effective today immediately, 2016, right? And there it is 9 years later. They're still working on it. Okay. We are like, you're going to lose your seat in 2 years because you don't vote for this bill. That's what we do, you know? So anyway, what happens to China? I still like China as a cheaper index. There are tech companies that make millions and millions, billions of dollars that are trading for like a 12 times earnings that they look attractive on the charts. They look attractive fundamentally. The question is the data real? I mean, if there's any big AI push in China, I think some of these tech stocks will take off. That's why I'm in Alibaba. That's why I'm in Baidu. I'm sure there's other ones that I'm missing, but I mean, you have what's your Chinese EV maker that's now larger than like every other automaker, every other EV maker? Like Tesla struggling in China, Tesla struggling in Europe, Tesla in general. It's like Elon Musk is just it's just a polarizing figure, right? But people love him or hate him. But anyway, whatever. China, we'll wait and see. Brazil, I still like Brazil. We're in a buy zone. I hope it stays there as long as we make higher lows or we stay above the 200 moving average. Latin America, same thing. Looking better above the 200 moving average. The longer we stay here, I think the more we have to the upside. I'm going to put a push in here for uranium. I do have some shares uranium. This was kind of my big push on nuclear. I think URA represents like the supply demand or the supply demand of uranium and hopefully the shortage of it. So if URA, which I have shares of now, I closed out my calls. I took some profit on the calls. They're up like, I think collectively up about maybe $4,000 or $5,000. So I took the calls off. Now I'm up about $2,300. I've got 10,000 year to date on this position. Open, I'm just holding shares of URA. So if we see, and I'd like to see this go higher. So this to me is a measure move. If we hit resistance and we're actually breaking this resistance, I mean, can we maybe have another accumulation here, maybe a run up? Maybe. So I'm trying to hold this thing out for at least a measure move towards like $40 to $42. And, would I buy back in? Maybe if I bought back in, I would then start doing at least protected puts. Otherwise, I think that this might just be another. I mean, this was a massive run, by the way. Like this one, I kind of wrote off. I mean, I was buying it in here around $20, had a nice little profit, took a bunch of profit, and then I bought back in on pullbacks when I was break even around $23, $24. Had a nice little run. I held it because I thought this would be more of the push into the 40s. So I held it. Once we got back to break even, I'm like, oh, there goes URA, just back down. So I didn't buy more here at $20, but price ultimately found support again and then ripped. Nice. It's up 73%. I mean, everyone's talking about, ooh, Broadcom's up 90%. Ooh, whatever's up. There's like all these rips we've seen since the bottom of April. Uranium, who knew it? Up 70% off the lows. Fortunately, I had shares in that. Mags at 52. Again, super sideways. Why do you think the indexes are sideways? Mags is sideways. So what does this look like? Well, if this is chop, 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 chop. I mean, I think that Mags could do a lot of dancing here on the backside of the trend line, but still be ultimately supported and still be bullish. So let's say that Mags just keeps going, and all of a sudden we have a break. Well, if we come back down to refill some of this gapping, this to me is still a really good technical trade. Buy a dip on Mags, see it get to all-time highs. I like that trade. So what does the index do? Probably follow it. I mean, I don't want to keep it so simple, but I mean, would you be terribly surprised if Mag 7 goes to all-time highs if the S&P goes higher? If Mag 7 dips and fills this gap if the S&P goes lower? These are huge companies that represent 20+%. I mean, it was at 30 to 34% concentration. That's how big the Mag 7 was, which was a problem. That's why the rotation happened this year. But they're still big, right? Companies that still return to over $1 trillion market cap, they're still huge, and they're still influencing the SPY and the Qs in a big way. So just don't be surprised if this, whatever Mags does, up or down, is going to be how we hit all-time highs or we get some gap fills. Apple, Amazon's up to some highs today. Broadcom gapping lower. They did beat earnings, but price gap lower. Google up a little bit. Meta, I mean, it's still creeping higher. Microsoft poked all-time highs. Overbought with divergence, but poked all-time highs. Netflix fading a little bit. Nvidia up a little bit, shy of those all-time highs at 152. Tesla back up to 301 today. I mean, is it just? I mean, I don't know. Look, if we get a big positive release on robotaxis, this stock's going to go up higher again and again and again. So I'm just going to set a chart alarm now. Are we going to break this high? If we break that high at 368, I don't think there's a reason that Tesla can't be back up to 486 by some point this year. Okay, let me check on my DPP trades this morning. They got to be looking a little bit better now at about 11:15. Up about 30 bucks, up about 30 bucks. So collectively, I can make my 50, 60 bucks, walk away with no risk. I think I'm going to do it. So this trade is, see if I get 25 cents out of this one. And see if I can get 25 cents out of this one. Oh, fudge, we are falling. Okay, I'm going to put a 25-cent debit in each one. This is actually pretty good. So if I get this, I get paid 30 to 60 cents on the day per contract. That's not bad. That's back to this trade right here. So the levels I needed to stay between, stay below this, stay above this. So if it just chops around for the day, that's actually kind of good. What I don't want to see is, are we going to come back down and fill the gap today and then start to threaten my put side? I don't want to see that. So I'd like to say noise. If it's noisy today, good, be noisy. But take about 30 cents a contract out of it if I can. So profit targets are set, and we'll see if they will activate. So these are close, only about 5 cents, 10 cents away. So keep an eye on that one. Tesla up over 6% today, best performer. The nice thing is not everyone just dumped and bailed out of Tesla. It dumped a lot yesterday. Buyers came right back in. So that was kind of encouraging. All right. Swiss pairs. Yeah, I'll wrap it up here in just a couple minutes. So some Swiss crosses. I'm still long Aussie Swiss. I'm looking to get back into 55.50. And this to me is if we get back to this level here, okay, this is one swing, pull back, and one more swing. I'm looking for a three-wave symmetry move to get me some profit right around that 6,000 handle. Aussie CAD, New Zealand CAD are very. So there, for example, if we run up to this cluster and 200 moving average, to me, this is one swing. One swing, pull back, one swing, get out with profit. CAD Swiss was a bit more. I mean, there's still some room to recover. I'd like to see this one hit the 200. There's a good floor there around 60, 200. Can we go this level, kind of grind our way up here, pull back, make a grind up into this next level? 6,400, I'd be happy. I'd like to see this thing get to 7,000. I'm willing to hold it long term, but I'm really not. I think if I get out of 64, I'm happy. Euro Swiss still super choppy. I just want to see if this will go back up to like 96 and change. Another one I'm trying to watch for a move back up to 98. Pound Swiss still looking for a run to 13.50 or so. New Zealand Swiss, we did that one. Dollar Swiss, near the lows, but just watching this trend line. If we get on the right-hand side of this trend line, is dollar able to get back to this pocket, get back to this like 92.05 level? I'll just put 9,200. If we get back to 92, but my profit target's like 85 now. So if my profit target's 85, we get back to this cluster at 8,800 right in here. I'm just going to take the profit. I took a ton of profit. This was a 2-year position that I held on dollar Swiss. Ended up making over 20,000 pips on it. I just built it up. I built it up and then took profit at 92. So I'm not trying to repeat that again. I don't want to hold it for another 2 years, but if I hold it for another 3 to 6 months and I can hit my kind of halfway point, I'm happy there too. Dollar yen, like I said, just be aware of the big range. Currency wise on the day, volatility is a little expanded because you've got weaker yen, stronger dollar. Otherwise, though, pretty clustered. You just have like the outliers of dollars on top, yens on the bottom. But pretty noisy day for non-farm. Okay. All right. That being said, I think I'm going to wrap it up for today. Have a fantastic weekend. We'll come back and do it again next week. Couple things important. We've got a mid-year review coming up in, I think, a week. Next week. I think next week's our mid-year review, and then Nick will be hosting myself and Blake Morrow on the trading battle over FOMC for June. So a couple cool things coming up here on top of the everyday sessions for A1 trading, and I appreciate everyone being here and checking it out. So, all right, cool. New trades for me for today. I added that trade on Lululemon, did a campaign trade, rolled my calls on IWM, MicroStrategy I put into campaign this week, and I'm trying to think anything else. That's probably about it. It's just been like a little bit of pruning in the portfolio, nothing too crazy. I've got plenty of cash ready for some, ratio spreads. I'm being patient. I still think this market has a corrective look to it, even if we hit all-time highs. And I'll just end into this. If we come back to tap, right now that we have time, so support here on the futures market, support here in the futures market, support here that the market behaved like broken and ripped back above. Time on the right-hand side of the trend line, if we go a little bit higher and we breach these highs, I'm not going to be a bear, okay? But I'm just telling you, don't be surprised if price does end up falling and sweeping some of these levels, that a correction is going to come. To what degree? I don't know. Maybe take a low to high and look at like a 30 and a 50 and a 70% zone. 30 is shallow, 50 is equilibrium, 70 is wedge bound. That means we'd have higher lows, maybe lower highs, and it's just the market goes sideways. This is like we had 2015-16. This is like we had from the top in 2021 to the down in 2022, up in 2023. Finally took us all the way into 2024 to break those highs. Like, this market has drawdowns, So I just think we're not immune to high price to earnings, lackluster returns. And I think earnings ultimately are potentially revised lower, So if they're revised lower, that's going to affect price action to the downside. So, all right, I'll let you go. Leave with that for the weekend. Come back and do it again next week. Am I the closer, by the way? Real quick, Chandler, am I closing today, or is it do we have someone else coming on? I'm the closer. All right. All right, SPX just got filled for 25 cents. That's one of two. I've got the other one still pending. It's got to be close. So this one's still working. Yeah, there's going to be closing down. So I'm going to take these trades off right here. So updating. Okay. So taking the wins there, grabbing some cash, and all in all, not bad. I'm hanging out right around those highs for the year. 250K is about my high for the year, and just hanging right there. So in the meantime, generate some income, watch price action, enjoy the weekend. All right, thanks everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.